All right, guys, welcome back. CA Inter Students May 23 exam is coming up. And in preparation of that, I've recorded two videos. This is the first part of it. There's a second part also. This has to do with the DT amendments. Now, ICAI always comes up with a document which says DT amendments and GST amendments. I was waiting for that. That has come out. So I'm making a small video and I'm trying to make you understand the small parts or the changes that have happened in this time's amendment videos. First of all, watch this video till the end. The DT amendments are really simple. Some new things have come out, but nothing difficult at all. In GST amendments, there are some changes which we will see in the second video. So watch out. I'm using the ICAI document itself so that we don't have to make another document. Also, you know that you've covered the document. Are amendments important? Yes, they are, because frequently ICAI tends to ask at least something from the amendment sheet. So here is ICAI's amendment sheet. Here we go. Just sharing the screen, and this is the amendment sheet on the screen in front of you. All right then, so shuru karte hain. Let's start the amendment sheet. This is income tax. Let's see what it is. I've already highlighted this thing. I will send the link for this document in the same video, so that, or you can just watch this video whenever you want to revise amendments. All right, so for your exam, guys, the relevant assessment here, as you know, for the May 23 exam is AY 23-24. The first amendment has to do with something in salaries. Guys, you know already salaries. Salaries means you're working in a job. You are a slave. There's someone master. You know the joke around it. Anyways, so you are an employee and you've fallen sick. COVID ho gaya hai. You've got COVID. Either you or any of your family members have got COVID. Of course, that has to be shown as proof. You need to have a positive report. And your employer has given you some money to take care of your medical expenses. So he in medical benefits, is that taxable as a perquisite? Yes. If you remember medical benefits, it is taxable as a perquisite. It is taxable as a perquisite. But what happens in this case? They've said that in case of COVID, in that case, you will not have to consider that as a perquisite. So, example, you or your family member have gotten sick because of COVID, hospitalized, and the medical bills paid by the employer. Is it a perquisite? Yes, but will not be taxed. Let's read it, guys. Reimbursement of COVID expenditure by employer to an exempt to be an exempt perquisite, subject to fulfillment of notified condition. Notified conditions only two. One is you need to have a positive report and you have to have any other documentation and a certificate by a prescribed doctor. So any sum paid by the employer, that is master, in respect of expenditure actually incurred by the employee on medical treatment or treatment of any of his family member in respect of illness relating to COVID would not be treated as a perquisite. So if you get an amount, that is not a perquisite. Remember that. Of course, you'll need a COVID-19 report, you'll need all the necessary documents, and you'll require a certificate from the doctor. Next, guys, again, income from other sources, a small, again, change, but again related to COVID, guys. So this year, the year assessment here for your exam is the year 23-24. And the financial year or the previous year is 22-23. In that also, if there were some legacy COVID issues, that has been tackled here. So watch the second amendment on the screen. You were sick, you had COVID, you didn't have the money to treat yourself or your family members. So you asked someone for help and they give you money. Now that money, guys, is it a gift? Yes. If you remember, in IFOS, there's a section called 56.2.10. In that they say MISB SATJO. That's a shortcut, of course, for my students. So if it's money and it's more than 50,000, then is it taxable as in IFOS? Yes. But they said that if it is related to COVID, then in that case, you will not be taxed on that amount. Of course, again, your conditions are you have to give a positive report, you have to give other documentation, and you have to fill up a form which needs to be filled up and sent to the government saying that, listen, this money I've received, it's not a gift, it is through my COVID expenses. So here we go. Let's see IFOS. Conditions for non-applicability of taxability provisions under section 56.2.10, which we know as gift tax, on amount received for COVID illness. Any sum received by an individual from any person in respect of any expenditure actually incurred by him on his medical treatment or treatment of any member of his family for any illness related to COVID would not be chargeable to tax. So congratulations, if you get more than 50,000 here, you will not be taxed. But you need a positive report, you need all the necessary documents. And guys, the details of these has to be submitted within 9 months from the end of the financial year or by 31st December 2022, whichever is later. So you need to tell the government that this has happened with you. All right. Here again, guys, there is another provision here, very interesting. Not actually something that is good. Unfortunately, someone in your family is no more because of COVID. They got COVID and within a period of 6 months, they lost their life because of COVID. And in that case, if their employer, example, let's say some family member of yours was working with Wipro, and if Wipro pays them some money, is that amount taxable? It's not life insurance, it's just a sum of money received. They say that that will not be taxed if it's coming from your employer, no limit. So Wipro can pay 10 lakh, 20 lakh, 30 lakh. And if it's any other person, and the limit is 10 lakh. So this is not when you're ill, this is when you unfortunately lost a family member in due to COVID. Guys, similarly, provides that any sum of money received by a member of the family of a deceased person. So this is basically for deceased. So in the exam, if they say that some member of a person's family has been deceased and they received some money from that person's employer, then without any limit, and from any other person up to 10 lakhs aggregate, guys, in that case, this will not be subject to any tax. Is this more than 50,000? Yes. Is it MISB SATJO? Yes. But still, so the first part was to do with treatment. This is to do with, unfortunately, someone's death. But guys, this money has to be received within 12 months. And there are some other conditions. And the cause of death should be COVID. So the money should not be received after 3-4 years. You cannot say there is COVID money. It has to be received within 12 months from the death of the person. Also, guys, the death of the individual should be within 6 months from the date of testing positive. It should not be after effect of COVID. It should be because of COVID in 6 months. Unfortunately, the family members have to upload a positive report, any other medical report or death certificate, because this is to do with death. And guys, you also have to fill up a form within 9 months or 31st December 2022, whichever is later. So summarizing this point, two things. If you're sick and you get some money, is it MISB SATJO more than 50,000 still? No problem, no tax, no gift. And on death, from your employer or from that deceased person's employer, no limit, and any other person up to 10 lakhs, but of course, certain conditions that should happen within 6 months and the amount should be received within 12 months. Two important COVID announcements, amendments done. Now let's move to the next one. Guys, the next one is a very, very interesting thing. To explain that, I will have to just open up a new sheet and just explain something that is happening here. So guys, this is Taj Hotels. And basically, this is an influencer. So this is an influencer who loves making reels. And Taj Hotel invites him to come to their property and gifts him, let's say, a voucher to stay for 2-3 days, and also gifts him, let's say, airline tickets of Vistara. So they have given him a lot of benefits. These can be in cash, they can be in kind. These benefits, right now, we are living in the age of social media influencers. We all know, guys, that people who dance or make reels, etc., they get a lot of benefits, not just dance and reels, but the shortcut is reels. That's why I'm saying reels. And a lot of people give them benefits, like car companies give cars out, mobile companies give mobile phones out, watch companies give watches, and Taj gives hotels and vouchers. So the government has now said that, listen, these guys who are making reels are indirectly making money through these benefits. These benefits are indirectly helping them make money. So the government here has told the guy, of course, in TDS, it's always the payer in the middle. This payer who's paying some benefits, they've told him that, listen, you need to value these benefits. And so these benefits, you need to value them. How do you value? We'll discuss. And if the valuation in 1 year, if you're giving to one influencer or one person, any person who's a resident, more than 20,000, then you need to deduct TDS at the rate of 10%. So this is something that is new, which we haven't studied, because I wanted to do it with the amendment so that you know the importance that this is something that is absolutely new. So this is a TDS. So example, this Taj, let's say voucher or these Vistara Airway tickets, etc., cost 90,000 rupees. Then on 90,000, they will have to deduct 9,000. Of course, in vouchers, they'll have to value it, and 9,000 they will have to pay as TDS. So this is what they need to pay. Now, this is only if it's more than 20,000. Some more conditions. The person whom they are paying has to be a resident. And this does not apply if the payer is a small individual, small HUF. If you remember, this is a shortcut. What is a small individual, small HUF? Small individual, small HUF is a person whose last year, not this year, last year's turnover in business was up to 1 crore and in profession was up to 50 lakhs. So guys, this is a section, and this is a brand new section, very highly expected in May 23 paper. And this section is 194 RR for reels. So this is how you will remember it. Repeating, any person in India who's giving any benefit, whether it's in cash, whether it's in kind, whether it's taxable, whether it's not taxable, it can be anything, right? From a car to land to mobile phone to watches, etc. If you are giving in 1 year aggregate to one person more than 20,000. So if you give first 18,000 and 18,000, yes, on the entire amount, you'll have to deduct TDS at the rate of 10%. and pay to the government. And this is applicable to residents, if you're paying to a resident, not to a non-resident. And this is only applicable to small individuals. This is, sorry, not applicable to small individuals, small HUF. So if the payer is a small individual, small HUF, then don't worry, this provision will not apply in your case. So there are some frequently asked questions on this section, guys. I'll tell you what are the questions, frequently asked questions. First, does it apply to gifts in kind? Yes, it applies to both gifts in kind as well as gifts in cash. Second, do we have to see whether this voucher is taxable in the hands of the person who's receiving it? No, we don't have to see taxability. Not taxable or taxable doesn't matter. So whether you're giving a car, whether you're giving anything, you will have to deduct TDS. Generally, guys, if you're giving a car, they will not be subject to any tax, but still you'll have to deduct TDS. Third, let's say I've given a car to someone and that influencer is using the car for his business. Can he claim depreciation? Yes, he can claim depreciation at whatever value you valued the car. So instead of Taj, if this was Hyundai and they had given a car worth 20 lakh rupees, then that 20 lakh rupees on that, they would deduct TDS at the rate of 10%. And the person who's getting it can take depreciation on that 20 lakh. Just saying. And fourth, that this, how do you value it? Now, guys, value basically means take the fair market value. If you have purchased this and you're sending it, then the purchase price. Example, Taj will not purchase a voucher. So in that case, they will take the fair market value. If they purchase something on the purchase price, or if it's something that they manufacture, then whatever is the selling price, in case of manufacturing, whatever they sell it for, that price will be considered as the value. As this section is highly probable in your exam this time. Let's see what this section is talking about. Guidelines, the section is section 194R, as you can see on the screen. This has been implemented from the 1st of July 2022. So in the middle of the year, they have seen it. It mandates that any person who's responsible for providing any benefit or perquisite to a resident. So it only when you are paying it to a resident. So if you give someone abroad, this provision does not apply. Shall deduct TDS at the rate of 10% on the value or the aggregate value of benefits. Only the benefit is more than 20,000. If the value or aggregate value of benefits requisite provided or likely to be provided to the resident. So per resident, if you're providing more than 20,000. So let's say if you're giving a mobile phone worth 18,000 to 3 influencers, no problem, because 18 to 1 influencer does not mean more than 20,000. This does not apply to small individuals, small HUF. They've defined that here. We already know that. And here there are some frequently asked questions. Is it necessary that the person providing benefit needs to check if the amount is taxable? No, you don't need to check. You have to deduct TDS on the value. Is it necessary that the benefit or perquisite? Is it necessary that the benefit or perquisite must be in kind? Whether it's in cash or kind doesn't matter. Tax has to be deducted. Is there any requirement to deduct TDS when the benefit is in the form of a capital asset? Yes, whether capital asset or any asset, you have to deduct TDS. Guys, one-time settlement. Let's talk about this. Example, let's say I've taken a loan from a bank, from let's say SBI Bank. I've taken a 1 crore rupee loan, and on that interest is 20 lakhs. So 1 crore 20 lakhs I need to pay to the bank, but I'm unable to pay it. So sometimes they waive off the interest. That's called a one-time settlement. I promise to pay them if they settle the amount. They reduce the interest so that at least I pay whatever it is. At one-time settlement, example, out of 1,20,000, they say 1 crore 20 lakhs. They say we'll reduce 5 lakhs. Will you at least pay 1 crore 15 lakh? I say, okay, I will pay that much. So that's called a one-time settlement. That is done generally by banks. So in that case, is there an indirect benefit to me? Yes, but in that there will not be TDS of 194R. So 194R does not apply to banks, to cooperative banks, scheduled banks, etc. This is a list, but generally it's all banks and financial institutions. How is the valuation to be taken? You have to take the fair market value. But in case the benefit has been purchased, then the purchase price. And if you're a manufacturer, then guys, it is the amount that you charge to customers. Many a times the social media influencer is given a product, example, a watch, a car, a mobile phone. Then guys, will that be subject to TDS? Yes. But what if he returns it? Of course, then there will be no benefit perquisite and hence there will be no TDS. All right. On bonus shares, there's no TDS anytime because bonus shares are not a benefit, guys. Aapko jo bonus shares, when you get bonus shares, it's actually not adding any value. If you imagine bonus shares, if a cake is cut in six pieces, and if I now decide to cut the cake into 12 pieces, will the cake size increase? No. So actually, there's no benefit to a person in terms of bonus shares. So this does not apply to bonus shares. If you get a car and you use it for a business purpose, can I claim depreciation on it? Yes, I can claim on the same value. We've discussed this. And this starts applying from July 1st. So you have to see from July 1st, if the value benefit is more than 20,000, then TDS has to be deducted. If the value or aggregate value of the benefit provided is more than 20,000 during the financial year, including the period up to 30th June. So in that period also you have to see, and if it is more than 20,000, so from the start of the year, if it's more than 20,000, then TDS will be applicable. Bonus shares is not subject to 194R. That's what this is saying. That's about it. Moving ahead to the next one. There are only two left. So moving ahead to the next one. So in TCS, there was a section where anytime you're sending money outside India, there was a scheme of RBI, liberalized remittance scheme, under which you can send money abroad, or if you're going to study abroad, people send money abroad, or for foreign holidays, you send money abroad. In all these cases, the person who was selling you the Forex guys had to collect extra. If you remember, this was a section called 206C1G1 Global. We had done a shortcut around it. I'm talking a little about that section. Now, this is the authorized dealer. He is basically the seller, and you are the buyer of foreign exchange. When you pay him money, he will collect something more, 5% more, and that was a TCS at the rate of 5%. And this had to be paid to the government as TCS. Now, here is a small change. In this case, they say that if you're the buyer, good, they will collect TCS. But if the buyer is a non-resident, example, this foreign exchange has been purchased by non-resident, can non-residents also purchase Forex? Why not? Then in that case, there will be no TDS. So non-applicability of provision of section 206C1G to a non-resident buyer not having a permanent establishment in India. What is permanent establishment? You don't have to worry. But just remember, to non-residents who don't have a presence in India, this section will not apply. All right. Filing of return of income and self-assessment. Very small change here. Let me summarize the change. Guys, just like you give your visiting card to people, just like you write your roll number on exam papers, same way, on many transactions that you do in India, you have to quote the PAN number and the Aadhaar number. If you don't have a PAN number, then you have to apply for one. So there are three transactions that they've spoken about. First is cash deposit. If you're depositing cash more than 20 lakhs in a year in one or more bank accounts, that's the first one. Second, if you are withdrawing cash, this is cash withdrawal, again more than 20 lakhs per annum. Or if you're opening a current account is generally used by business. In these three scenarios, you have to quote your PAN number. And if you don't have your PAN number by when you're doing this, then you have to apply it within 7 days of doing this. So example, I'm opening a current account. I don't have a PAN number. Then before opening the current account, within 7 days, you need to apply for the PAN number. So these are basically when should PAN number be applied for making an application for PAN number. Every person who intends to deposit cash in one or more accounts of more than 20 lakhs in a year, or who withdraws cash of more than 20 lakhs in a year, or intends to open a current account, has to apply for a PAN. Agar nahi hai PAN, if you don't have a PAN, then you need to apply at least 7 days before the requisite date. So whenever he wants to deposit, whenever he wants to withdraw, whenever he wants to open the account, before 7 days, he needs to apply for a PAN. And same thing, same three transactions are here again: cash deposit, cash withdrawal, and current account. In this case, whenever you are actually doing this transaction, you need to do, you quote your PAN or your Aadhaar number interchangeably. However, this rule does not apply to the government. Guys, this is the end of the 9-page DT amendment that ICAI has uploaded. So remember, guys, of this, the most important, of course, COVID is very simple. 194R is the one that steals the show. So do this well. Watch every time you want to revise, watch this. I'm putting this in the CA Inter May 23 playlist on YouTube, so you can watch it whenever you watch the revision videos. All the best. See you for the GST amendment video. Hello? 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 Yeah? Yeah, tell me, Silvi. Yes, tell me. Yes, sure.